I'm telling you, I don't know if you feel it, but the XRP Ledger, the ecosystem is firing on all cylinders. I think they're building in all the right places, putting the pieces together for a massive tidal wave of adoption. We see Vet here posting this picture from the Apex Developer Conference, building the multi-chain ecosystem. Multi-chain is where it's at. The future is multi-chain, in the XRP Ledger, I think, is positioned perfectly to link up with all these smart contract blockchains in a symbiotic manner. And you're going to see a ton of value come ripping onto the ledger for efficient payments, settlements, and just flow of value. This is perfect. They are building bridging mechanisms, on-chain oracles. Again, within Ripple headquarters and also the independent developers, they're hitting all the right spots. I think we are on the right track for massive, massive adoption. Ripple, with the big announcement, they finalized their acquisition of Standard Custody. Big, big acquisition for them. And it is one thing on their mind with this. RWAs, starting with stablecoins. That is going to be the ticket here. We see Jack McDonald saying, very excited to share that as part of the deal closing, he's going to be joining Ripple as Senior Vice President of Stablecoins to lead the team bringing Ripple stablecoin to market later this year, although he will remain CEO of Standard Custody. This is their focus here is going to be a big area of their business. But beyond that, the new cash flows that come from the stablecoins and the RWAs and all of that, this is going to be a big area of adoption for XRP Ledger technology. Ripple making a big investment into the adoption of the XRP Ledger in the Japan region, designating 1 billion XRP to fund corporate partnerships, developer grants, startup investments, and community growth. Big investment to an important area. I'm glad to see it there. Ripple announced tokenized gold coming to the XRP Ledger in a partnership with Meld, and it's not just gold. It's going to be tokenized silver as well. This is it. Real world assets, digital form. You're going to be able to take your tokenized gold and throw it in an AMM pool and earn yield from it. Your silver, you're going to be able to use it in borrowing and lending. This is going to be massive, and it's just the very first deal of many like this you're going to see. Apple, big day, and why? Because of artificial intelligence. They're going to take AI, existing AI, but they're going to package it in a way and get it into a lot of people's hands for the first time. Big move. And it's not just Apple. A record 41% of S&P 500 companies mention AI during their Q1 2024 earnings calls. Part of that is, of course, we're in this little bit of hype cycle. Everyone wants to be involved with AI. But, this is clearly the future. And either you're going to integrate this into your business, into your life, or you're going to be left behind. And it's really crypto in the same way. You have to really see where this world is going. Artificial intelligence, cryptocurrencies. That's the future here. Good Morning Crypto with a great post ranking the top blockchains for development. Hedera leading the way with 552 developers for the month of May. Optimism coming in at number 2. Cardano number 3. It's the usual suspects, isn't it? The projects that don't care about what the token value is or what the market's doing or what inflation data is going to be tomorrow. All they care about is building the future, and they continue to do so. Rounding out the top 10, 3 of my favorite chains out there: Cosmos, Atom, Polkadot, and Kusama. Just always up there in the top builders within the crypto space. We have this great report about smart contract blockchains. I say this: if you're going to be in cryptocurrencies, you have to love smart contract blockchains. It's where it's at. You're going to be in gaming, you're going to be in DeFi, NFTs, what have you. It's going to originate on smart contract blockchains. We see in smart contract platforms, there's a value accrual, which is a flywheel that connects the fees and network usage with token value. So Grayscale's trying to find a way to, let's take a look at blockchain, and can we analyze this kind of like we do a business? And they say the following: there's a common misconception that crypto assets have no fundamental value and cannot be analyzed like traditional investments. Grayscale research believes this is simply not true. Smart contract platforms like Ethereum and Solana, for example, generate fees, revenue, and that comes from economic activity. And so we can kind of look at this and analyze it much like a business. Now, the goal of crypto is not to have the highest fees, but it's an indicator of the value of the transactions that you have going on your blockchain here. And there's different approaches here, of course. You have Ethereum that's going after the high value transactions, and with that comes higher fees. Of course, you have blockchains like Solana that are going for volume, and they try to capture a lot of the market by giving you, high throughput and very, very low fees. Right now, Ethereum leads the way in terms of transaction value locked. Another way we can look at these was 66 billion, over 7 times larger than the next competitor. In addition, its advantages in the total number of ecosystem applications, it creates a network effect towards attracting new developers, applications, and users. You're trying to do something big. Where's the money already at? Where's the builders already at? You start building network effect, of course. Solana's number of transactions actually outpace Ethereum right now. Now, they're not earning as much fee revenue from those transactions. Those transactions are not as high a value, but in terms of just pure numbers, Solana has more. We can see that from this chart here. Ethereum, highest market cap, a strong amount of transactions, a lot of active users, and transaction value locked is really where they dominate everyone. That's this one here. Just dominating everyone in terms of transaction value locked and also fees. But Solana, many more transactions, a lot more addresses that are active, but not much transaction value locked, TVL. And also fee revenue quite a bit behind Ethereum. Really the outlier here, very interesting, Near. I mean, in most of these categories, market cap, TVL, fee revenue, Near is way behind. But they do have the most active addresses out of any blockchain. Pretty interesting here. Go on to the next part of this. They have this little chart that shows, fee revenue is closely correlated to market cap. Of course, Ethereum is number one. We see Solana, AVAX go on down the list here. So, at least to now, this seems to kind of play out. The more fee revenue your chain produces, the more valuable your token will be. And again, I think there's somewhere in the middle there you want. You want efficient transactions. You want people to be able to transact in a kind of reasonable way, but you want a lot of value being transacted on your network. Ethereum started to face serious questions regarding scaling in 2022. These are one of those weird situations. Increased usage led to congestion, almost an unusable network. Fees reaching $200 per transaction. However, increased usage and high average transaction fees also translated into significant value accrual. Ethereum generated over $2 billion in total network fee revenue in 2023. And all of these transactions, all of these fees, led to a lot of Ethereum being burned, almost 1.7% of the supply. I'll tell you this, long term, you don't want absorbent fees. Worked out well for him here, but you got to get that scaling in place. And you have to have reasonable fees for the value of the transaction you're doing. Because when it's $200 a transaction, a lot of people, they're just left out. You leave a lot of use cases on the sidelines when you can't get that stuff under control. And part of that, I guess, is the layer 2 approach that they have here. Let's go to this last one here. And this shows Near. You see this chart here. Most active addresses, Near leads all smart contract platforms with almost 1.4 million daily active users. And it's competitive in throughput, very fast chain. You can push a lot of transactions through there. Will be great for gaming and things like that. And it's right up there with the fastest chains in the world, like Solana. Really like Near a lot. I like Near a lot more than I like Solana, to be honest with you. But Near is still far behind its competitors in user-based monetization. So they got a lot of people using it, but they're not making much fees from their on-chain transactions. Only 4.1 million generated in fees year to date. While Near Network has shown its ability to process transactions at a high rate, it's not currently delivering the amount of value accrual to the token holders or stakers that would be indicate a valuation at the level of its competitors. So you just don't have as many high value transactions on this chain yet. Despite its relative inability thus far to monetize, Near's substantial adoption serves as an important starting point. So that's it. They're trying to get this thing up and running. It's a highly capable chain. You have a lot of people using it. Can you attract higher value? I think is what we're looking there. Interesting right now, hedge funds are net short Bitcoin right now by quite a bit, by 6.3 billion. Will we see the price go down? Everyone waiting for this inflation report here. By the time you watch this, you may know the numbers. But Most people are thinking it's going to come in at about 3.4%. If it comes in higher than that, should be a fun day. We'll have to see how that plays out. This is probably the dumbest article I've seen. Congress must ask tough questions about crypto industry favored regulations. And what they're saying is, given the crypto industry's long rap sheet of lawlessness, arrests, criminal convictions, predatory conduct, illegal behavior, bankruptcies, lawsuits, scandals, blah, blah, blah. We know that. Why are we looking for crypto regulations? They're like, the crypto industry should not be rewarded. Why will we look at an industry and say, you know what, there's a lot of misconduct? And the way to help is to not have clear rules, to not have regulations. Like, this is the dumbest thing ever. If you have an industry that's growing and it's got value and you have investors, well, how do you protect people? You have clear laws. And that's how you chase off a lot of the nonsense. Because right now, a lot of your scam artists, they're able to kind of hide out because they don't have to meet any compliance. They don't have to do any reporting. It's a great environment for them. Why the hell would think that it's going to be better off by not having clear rules just boggles my mind. Like, all these things that they are putting up here, you know how you fix that? Tough regulations. Sensible ones that allow the industry to grow. And people like Ripple and people like the Cardano Foundation and, so on and so forth, they can go out and build the future. Yay for that. But, regulations that keep a lot of the scammers out. That's what we need. This is a nonsensical article, probably funded by Elizabeth Warren. Who knows? Let me know what you think down below. As always, please like, please subscribe. The revolution will be televised right here on Jungle Link.